to another class of Lesson Up Squad. So today we are going to be continuing with manufacturing part 3. Today we are going to be looking at all our general ledger accounts of manufacturing. We're going to look at a set of general ledger accounts of inventory, which are our assets and are recorded in the balance sheet. Then we're going to look at our cost accounts, which are our expenses, and they are recorded in our income statements. And we will also be looking at some other important accounts. So now we're firstly going to be looking at our inventory accounts, which includes raw materials, work in process, and finished goods. Now all of these are our asset accounts. So when any increase is done to the transaction, it's done on the debit side, and any decrease done to the transaction is done on the credit side. So firstly, let's start with our raw material general ledger account. Now our raw material general ledger account is all our raw materials that are purchased and then stored into the warehouse. So it's not just the materials that are used in the manufacturing process, it's all the materials purchased and then just stored into the warehouse. So firstly, we have our balance here. This is the value of raw materials left over from last year. Then we have our raw materials that we purchase, which could either be purchased with cash or with credit. So if it's purchased with cash, we use bank, and if it's purchased on credit, we use creditors control. So obviously when we purchase those goods, the raw materials in our warehouse increases. Then we have our carriage on purchases. This is the transportation cost for the materials to be delivered to the manufacturing company, and that's also on our debit side. Then when we come to our credit side, right, we have our direct material. This is the part of raw material that is transferred to the factory from the warehouse. Okay, then here when we have our creditors control and bank, this is when we find that the goods supplied to us, the raw materials that were supplied to us, are inferior or they are bad quality or damaged, and now we have to return it back to the supplier. So obviously when we return those raw materials back to the supplier, our raw materials in the warehouse decreases. Then here when we have our balance again is the balance of raw materials left over in our warehouse at the end of the current year. Now moving on to our next account, general ledger account, which is work in process. Now work in process is where our goods are semi-finished, right? Where goods are still in the process of being manufactured. And so when we have our balance here, these are incomplete manufactured goods of last year. Then here where we have direct material, direct labor, and factory overhead, these are the resources that were transferred to the factory to be used in the inventory account. I mean to be used to make our inventories, right? Now remember, our factory overhead includes our indirect labor, indirect material, and all other factory costs. Now the moment we are done making those inventory using these three elements, what happens is it's transferred to the finished goods. It's recorded, and that's why we have it on the credit side, because now we're removing it from our factory and now we're transferring it to the shop because it's now ready to be sold to the consumers. So now we remove it from the factory, and that's why it's on the credit side, because the value of goods in our factory is now decreasing. Then the balance here that we have here is the balance that is of the value of inventory that are still incomplete and not completely manufactured. Now let's look at our next inventory account, which is finished goods. Finished goods is used when the manufacturer completes the goods and now they transfer it to the shop, and now it's ready to be sold to the consumers. So let's start on the debit side where we have our balance. This is the value of finished goods that still remain in the shop and were not sold last year. Then our next one is work in process. This is the value of more complete goods transferred from the working process to the finished goods account in the current year, and now they are ready to be sold to the consumers. Now, from the debit side, the part of the complete goods that are sold to the consumers is recorded on the credit side as cost of sales. Now remember, whenever inventory is sold, you will always record it at cost and not selling price in the inventory account, and finished good is our inventory account. Then again, our balance is the value of goods that were left over in the shop and are not yet sold. So these are the value of goods left over in the shop. So now let's look at our next set of general ledger accounts, which is our cost accounts. These include direct material, direct labor, and factory overhead, and they are the expenses or costs incurred in the factory during the manufacturing process. So we have our first account of direct material, and as you can see on our debit side, we have recorded raw materials. Now this is the raw materials that we have received from the warehouse and got transferred to the factory, which will now be used in the manufacturing process. So you can see that it has been cross-referenced to the raw material general ledger account. And then we balance this account off with working process, which is on the credit side. Our direct material cost account includes costs such as wages that are paid to the employee, UIF contribution costs, and skills development costs incurred by the employer. And again, you're going to balance it off with working process on the credit side. Then we have factory overhead costs. Now factory overhead costs includes our indirect material costs, indirect labor costs, as well as all other costs that has incurred in the factory, such as electricity, depreciation, rent, insurance, and so much more. And then we're going to balance it off with working process on the credit side. Now, remember in the previous slide we were doing our working process general ledger account, and we said that we had our direct materials, direct labor, and factory overhead. You can see that this is all cross-referenced to all these respective accounts. These are other accounts that you could be tested on when dealing with the topic manufacturing. So let's begin with the first one, which is sales general ledger account. Now sales, you record sales when you receive an income, okay, and income always increases on the credit side. So the finished goods that are now in the shop and ready to be sold to the consumers, when they are sold, they could be sold either on cash to the consumers, or either it could be sold on the credit to the consumers. So depending on that, you are going to record it as bank or debtors control. Once you have recorded that, you are then going to close it off with your trading account on the debit side. Our next general ledger account is cost of sales, which is an expense account. So when goods are sold, we record the cost price that we paid to the supplier on the debit side. We record it as finished goods or inventory on the debit side, but remember it is only for the goods that are sold. And then you then close it off with the trading account balance on the credit side. Now we use the trading account to determine if we made any profit, and if we made any profit, how much profit we have made. So we record all our sales on the credit side and all our cost of sales on the debit side in the trading account general ledger. And when we're balancing it off, and if the balance appears on the debit side, we have made a gross profit, and if the balance appears on the credit side, we have made a gross loss. Until then, please feel free to contact us on Instagram or WhatsApp, or drop us a mail at Lesson Up Squad, and also please subscribe to our YouTube channel Lesson Up Squad. Till then, I'll see you next time. Goodbye.